Well, it causes a lot of uncertainty and concern, obviously, throughout the market. This is the largest automotive market in the planet, and they're trying to figure out how many vehicles are going to sell over there. And we've got China, of course, contracting in terms of its market right now, which most people didn't expect. And now you've got bigger tariffs coming against all the U.S. vehicles. At the same time, you've got someone like Toyota who's doing quite well in China. And I also feel like when there's a slowdown in any economy, including the Chinese economy, I think consumers get more conservative. They want to buy something that they really know is going to be reliable and have high quality. Toyota's got a good reputation for that, has for decades. So I think that gives them a real advantage even before the trade issues come into play.
So let's rewind a little bit. The impact of this ongoing trade war, what are we now, into 18, 19 months into it already? It's basically pushed up costs for a lot of things, including cars, at a time when the auto sector, auto market is just not doing well. I mean, this is pretty much it's sort of a focal point or a good place to look for the negative consequences of what's been going on for the last 18, 19 months.
No, it really is. And, Martin, I think the only reason that we're doing as well as we are is because the economic indicators in the U.S. still remain quite strong. You've got, plenty of confidence with consumers. Right now, you've got another Fed cut that we just had. This is helping to offset this increasing price pattern that we've seen, like you said, for months and months. And a lot of it's due to the trade wars. But it just doesn't seem sustainable. You can't keep cutting rates and you can't keep kind of depending on consumers to ignore these rising prices of vehicles or to figure out creative ways to get around them with longer financing or other creative tricks. At some point, you just wonder how many consumers are we pricing out of the new car market as these MSRPs and these transaction prices climb.
Yeah, it's making secondhand prices or secondhand cars looking a little bit more attractive, maybe a lot more attractive. I got to ask you, the official response from China so far to the president's tariffs is, look, it's not the right thing to do. It's not constructive. It doesn't help ease trade frictions. That's probably no surprise. Tactically, though, are you expecting or are you getting any sense that China could target U.S. autos, which are already, I mean, U.S. brands, as you suggested a couple of seconds ago, are already trailing big foreign names like, say, Toyota in the China market?
Well, I feel like when push comes to shove, obviously the Chinese would love to see their own companies succeed. And I think at this point, what you've got are Chinese automakers getting better and better at building cars. I think the domestic brands, which in China were never really as appealing because the car company and the industry was so young, and you could tell with the products, that's changing. The products are getting more competitive. So if you combine a more competitive domestic product from China, along with easier pricing and less tariff issues for Japan or other countries with tariffs from the U.S., it does start to seem like you're taking a real negative stance, and you're really putting handicaps on the U.S. automakers to succeed in China.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.